Hello everyone, my name is Vedant and welcome to Markets Daily, a daily stock market insights and analysis podcast by Bajaj Broking. Our mission is always to bring our listeners, that's you, the daily financial news and advice that you will need before the markets open so that you can make the best decisions when it comes to improving your finances. And along with this program, if you require any more information, please do visit www.bajajbroking.in. With that out of the way, let's get into today's episode. Starting with the top news headlines for Indian business today, gold topped $2,200 an ounce in valuation for the first time after the Federal Reserve maintained its outlook for 3/4 point rate cuts this year, suggesting that they aren't alarmed by a recent uptick in inflation. Moving on, pharma company Wockhardt has launched a QIP in order to raise funds. RVNL has emerged as the lowest bidder for a project worth approximately 167.28 crore rupees of SERHQ Electrical Southeastern Railway. Moving on, the board of Anup Engineering has approved a bonus issue in the ratio of 1:1. And lastly, NBCC has been selected by the MEA for a Saudi Arabia project worth approximately 260 crore rupees. Those were the top 5 headlines for Indian business today. For any additional headlines, please be sure to check out the description of this podcast episode, wherever you get your podcasts. But moving on to today's global market insights, the S&P 500 closed above 5,200 points for the first time on Wednesday as the Federal Reserve kept interest rates unchanged and continued to signal that there will be rate cuts later this year, easing fears that the recent bout of inflation would force the central bank to lean less dovish. In numbers, the S&P 500 rose 0.9% to a record of 5,233.46 points. The Nasdaq Composite was 1.3% higher, and the Dow Jones Industrial Average rose 1% or 401 points. It should also be noted that the Dow and the Nasdaq also closed at record highs today. And as mentioned, the Fed has kept interest rates on hold and continued to see its benchmark rate falling to 4.6% next year, suggesting 3 rate cuts in 2024, unchanged from the prior projection in December. Following the decision, it is believed that the first rate cut will come sometime around June of this year, and economic growth will slow enough and inflation will ease enough. While the markets were largely cheered by Fed officials largely maintaining their forecast for lower rates this year, Federal Reserve Chair Jerome Powell still projected some caution over sticky inflation and flagged continued resilience in the US economy, which is a trend that seemingly bodes well for corporate earnings. Focus now turns to the upcoming Purchasing Managers Index readings for March, which are expected to offer more cues on the US economy, and both manufacturing and services activity is expected to have remained comfortable in expansion so far in March. Moving away from the US to the east, the Nikkei has hit a fresh all-time high as Asia markets also climbed after the Federal Reserve maintained its forecast for 3 rate cuts while holding the federal funds rate at 5.25 to 5.5%. In numbers, Japan's Nikkei 225 surged 1.57%, hitting a new all-time high, while the Topix also set a new record and rose 1.41%. South Korea's Kospi also climbed 1.52% to hit its highest level since April of 2022, while the small-cap Kosdaq was up 1.48%. And with all that news about what's happening outside India out of the way, let's get into the Trader Stock section where we talk about the Indian benchmark indices. For the GIFT Nifty and intraday view, the GIFT Nifty suggests a gap-up opening signaling pullback after a recent decline. We expect the Spot Nifty to extend pullback towards the 22,050 to 22,100 levels in today's session. For the Nifty previous day outlook, benchmark indices traded in a range with high volatility and closed on a flat note on Wednesday ahead of the Federal Reserve monetary policy outcome. Nifty traded in a 200-point range, oscillating between positive and negative territory to close the session marginally higher by 0.2% at 21,855 levels. The Bank Nifty also traded with high volatility and closed the weekly expiry session marginally lower by 0.1% at 46,330 levels. So what does this look like on the daily time scale? Well, the index has formed a doji candle with long shadows in either direction, highlighting consolidation amid high volatility. The index, however, closed below the 50-day EMA for the second session in a row, highlighting continuation of the overall corrective bias. Going ahead though, the Nifty holding above Wednesday's low of 21,710 levels will lead to a pullback towards the 22,100 to 22,200 levels in the coming sessions, while a breach below the low will signal extension of the decline towards 21,500 levels in the coming weeks. Key short-term resistance for the Nifty has been placed at the 22,300 to 22,400 levels. The key support area for the Nifty is placed at the 21,500 level, as it is the confluence of the 89 days EMA, which is currently placed at 21,440 levels, and the 80% retracement of the entire up move of the January to March 2024 window. Moving on to the intraday levels. For the Nifty, intraday resistance is situated at 22,040 levels, followed by 22,100 levels. Conversely, downside support is located at 21,930 levels, followed by 21,810 levels. For the Bank Nifty, intraday resistance is positioned at 46,850 levels, followed by 47,090 levels, while downside support is found at 46,510 levels, followed by 46,250 levels. And lastly, for the Fin Nifty, intraday resistance is positioned at 20,720 levels, followed by 20,830 levels, while downside support is found at 20,600 levels, followed by 20,510 levels. And moving on to the last section about the Indian markets, we are following the derivative data analysis. For the Nifty, the highest call open interest addition has been observed at the 22,000 level, followed by 21,900 levels, which is likely to serve as an immediate resistance for the weekly expiry and seems difficult to surpass this level. The point that should be noted is that major put open interest addition has shifted towards the 21,500 level, while the immediate put open interest addition has been positioned at the 21,700 level, which will serve as a crucial support for the day. And according to the option chain analysis, dominance of call writers has been observed across the strikes above the 21,900 level, and shifting of the put writers to the lower level indicates a negative data point. However, for the weekly expiry, the immediate range for the Nifty is likely to be between the 21,700 level and the 22,000 level, and the index is likely to consolidate within the range, while the Nifty PCR has been increased by 0.06 and now stands at 0.79. For the Bank Nifty, the accumulation of call as well as put open interest addition at the single strike of 46,500 levels indicates a straddle formation and is likely to be a deciding level. The major call open interest addition has been observed at the 46,500 level, which is likely to act as an immediate resistance for the Bank Nifty. However, if the price surpasses and sustains above the 46,500 level, short covering could be likely towards the 47,000 level, where the second highest call open interest is noticed. The substantial put open interest addition is placed at the 46,500 level, which suggests price holding below 46,500 levels may lead to a corrective bias and can drag towards the 46,000 level, where the second highest put open interest is placed. And according to the option chain analysis, the Bank Nifty's immediate range for the day is likely to be between 46,000 and 47,000 levels and is likely to consolidate within that range. So with all the financial news and insights about the foreign equities market and the Indian equities market out of the way, it is time to move away from equities altogether into the other asset classes. For the Treasury yields, the prospect of rate reductions has weighed on them as the 2-year note slid 7.9 basis points to a yield of 4.6129%, and the benchmark 10-year notes were down 1.5 basis points to close at 4.281%. The dollar reversed into losses after the Fed's meeting, with the dollar index falling 0.433%, and the softer dollar helped the Japanese yen claw back some of its losses. The dollar index closed at 102.85 levels. Oil prices retreated from multi-month highs. However, due to recent gains in the dollar, Brent fell 1.95% to close at $81.68 per barrel in valuation. And lastly, gold prices moved higher on the rate cut bet after the FED policy by over 1% to close at $2,185.69 an ounce in valuation, trading around this month's record high of $2,194.99 per ounce in valuation. And with that, we have reached the end of today's episode. We need to start knuckling down and getting ready for the markets opening later today. As always, I hope you all have gotten something meaningful out of today's program. For any additional news headlines that we might not have covered, please do check the description box of this episode. And for any more information, as mentioned, please do visit www.bajajbroking.in. This podcast was made possible by the good people at Bajaj Broking, and we can't wait to bring more financial news and analysis to you when we return tomorrow morning. Cheers, everyone.
Investments in the securities market are subject to market risk. Read all related documents carefully before investing.